I remember when I first got into the world of the stock market, I started with penny stocks. Stocks that usually cost only a few dollars. I was so excited that I would read about every company, analyze its financial statements, look at the recent news, and try to pick the right company to invest, so that the stock price rises and I would sell it to make a profit. I was inspired by the likes of Warren Buffett. I mean, this guy became one of the richest people in the world by picking the right stock, and I thought I should give it a try. I didn't bet all my money because I was inexperienced and I wasn't ready to lose the money that I hardly worked to earn. Nevertheless, I kept going, but after a few weeks of actively watching the stock market, I hated it because it takes days if not weeks just to find the right company, and even then you might pick the wrong one. You can't invest in every company unless your father will give you a small loan of $1 million and you won't bother losing it. Every company is trying its best to look like it's doing great so that you invest in them, but then you might not realize that they might be bleeding on the other side. When the stock price goes down right in front of your eyes after you purchased it, you get emotional. It's not easy to look at the chart and enjoy losing money. You might not be able to control your emotions and would sell it at a loss, but that's the nature of the stock market. If you are an entrepreneur or you have a day job, you simply won't have the time and energy to actively invest in the stock market. You don't want to simply throw your money without being confident that you will make more money at the end of the day, or at least won't lose what you have invested. So when I was about to leave this mysterious world of the stock market, luckily, I came across index funds. An index fund is the best option for most people. It's passive income where you do not have to do anything but enjoy watching how your money grows. When you invest in a single company, the risk is too high because if this company goes down, you lose all of your money. But what happens if you invest in 100 companies, for example? Chances that they will all go down are low. In fact, if one of them will go down, few others will definitely go up. And that's what index funds are for. They invest in every company in the market. When you invest in an index fund, let's say in S&P 500, you're investing in the top 500 publicly traded companies in the US. It's like buying a share of the American economy. No matter how many companies will go down, most of them in general are going to grow, unless the entire economy crashes, as it happened in 2008. And the great part about it is that there are index funds in every market, but I prefer to stick to S&P 500. I have more faith in the American economy than any other. Now the main question is, how profitable are index funds? In 2017, S&P 500's return was almost 20%, which is incredible. But a year after that, it was negative 6.2%. You would be better off if you haven't invested in that year. However, if you look at the bigger picture over a long period of time, the trend is upward. Over the past 90 years, the average return was almost 10%. If you take into the account inflation, that would be 7 to 8%. Still not bad, right? If you have invested $10,000 in S&P 500 in 1942, it would worth today over $51 million. I'm not really sure why I'm telling you this because you probably weren't even born at that time, but that's a fun fact to know. I will leave a link in the description to a calculator that would tell you how much you will make if you invest $1,000, for example, every month for the next 20 years. Before you start investing, I would highly suggest you to learn the basics of the stock market. Even if you're investing in an index fund, you should at least have an idea of how the stock market works. You can go ahead and read books or articles on this matter, or you can save your time and watch this short animated course by Business Casual on Skillshare. I have watched this course and it's one of the best courses on Skillshare about the stock market. And the best part about it is that the first 200 of you who will use the link in the description will get the course for free and 2 months of Skillshare's premium subscription. Hope this video is helpful. Thanks guys for watching, and I will see you in the next one.